Tell you what, it's not too difficult to look at the glass of Times Media half full, particularly if you're one of the investors in that company, and we'll be talking about that in just a moment with the Chief Executive, Andrew Bonamore. But just to give you a little bit of background, the company generated poor top-line results with the pre-tax profit of 53 million rand as against 110 million rand in the previous financial year. Headline earnings per share were down by a similar amount as well. But Andrew, I guess from your perspective, the big story here is the way you've been able to repay the debt. There was 1.1 billion rands worth of debt incurred in the transaction, which changed everything around. And of that amount, 452 million rand has already been repaid.
These sort of businesses have been very positive and very strong cash flow generators, and Times Media certainly is. And I think what we've also done is I think some of the cost savings are coming through, and also sort of improving the working capital in the business has obviously assisted that. But I think it's very important that and I try to make the point in my commentary that the debt that's been repaid has actually been out of cash flow, no asset sales. Because a lot of the asset sales we've done, probably only close in the next month or two. I think, sometimes I look at the business very differently to like a fund manager. We're very cash flow, return on investment focused, and fund managers tend to be very earnings per share. But I think what we try to do, for this year is actually just, look through the business, look through the divisions where there were issues, where there was stock that had to be written down that hadn't been written down, for a while, and I think we try to clean the cupboard, as it were.
After the asset sales that you've already announced, what's going to happen to the debt? Will that be completely wiped out?
It would be, but I think what we would prefer to do, and what we're probably going to do, is leave a bit of debt in the business. Possibly about 250-300 million. Because I think it's very good, to leave some debt and have it improves your return on equity, etc. And it gives us a bit of money to take and have a bit of a war chest, to shore up either for acquisitions or ultimately pay dividends back to our shareholders.
You've really gone into a lot of detail in the SENS report.
Yes.
I mentioned earlier, tongue-in-cheek to Lindsay, that it's almost like you're trying to convince yourselves that you know where the future of media is going. No one else seems to know. What was the thought behind this?
No, I think in the past, even speaking to some of our shareholders, I think there was I don't think really that people actually understand what's in the business, and two, how the businesses actually work, and like what I try to do, especially in the media side, is actually explain kind of the positioning of the newspaper, especially like something like the Sunday Times, and why it's so, it has such a big role and such a dominant position. It was kind of more to explain the various businesses, how they fit together, and a bit of the strategy. And also, I tried to kind of write it as if, to almost to show strategy, what we're trying to do with the various components. And it's all fine and well to say we've got content, we own content, but the big thing is, how do you monetize that content? How do you actually turn what you have that's potentially quite valuable into hard cash? And ultimately, what you've got to do there is you've got to make one, you've got to make sure that your businesses, the various units actually work together, which is something I've been working quite hard to do. And secondly, you've got to have channels to market, and that's one of the things why we did this foray into Africa, into multimedia in the radio and TV space, because ultimately we can then sell our content, be it music, be it our films and other TV productions that we do. So it gives us another channel.
It is a little, for outsiders, a little strange to see you making this big investment into Ghana, a company that none of us in South Africa know terribly well, but at the same time retrenching within your local operations.
I think what we if you in the interim statement that I wrote, we all saw the business as in two phases. Phase one was kind of get back into our core. If you look at we had 4 divisions. Each division faced massive headwinds, in terms of where the various sectors and businesses were going. So what we try to do then is we try to choose the ones where we believe we had competitive advantage, where we actually do generate good return on our investment. And then, from there, our phase 2 was always, okay, where's the future for our business? And the future for us is very difficult for us to get real growth in South Africa in the media, given that, we have quite sort of restrictions in cross-media ownership. And we've always been looking ultimately to get into radio, to get into broadcasting. And you and I have had this chat before. We've actually got a very strong TV offering, which is something we're trying to develop, and where a lot of our focus is going to be going forward. At the same time, I think in the past the businesses had become bloated, and I think that what we try to do, and it's always a hard job, and I think from our side is we haven't asked sort of our divisional managers to do what we haven't asked. We've taken a head office from 55 people to 8. So we really sort of try to make the business more entrepreneurial and more kind of light-footed, if I can call it that. At the same time, trying to incentivize and make and if I can call it brighten up business.
The investment into Ghana, the company, how does one do a due diligence on a business like that? Did you fly out a number of times, go and meet the people there?
Yes, no, we spent quite a bit of time in Ghana with the team. I think it's a relationship that's been developing over time. In our past, we've obviously travelled a lot in Africa, so we've been looking at various assets. So this is something that was on our radar even before getting involved, in Times Media. And I think what we did is we spent quite a lot of time in Ghana, a number of trips, and this is something we also like, for example, I'm there next week, to work closely with it. We're quite excited about it. We think it's one of those investments that could be at 10 times money. The region's growing, and I think especially a place like Ghana, as long as it's stable and your consumer is becoming more wealthier, that region is going to do very well.
Yeah, there are lots of Africa bulls around. Just to close off with, your strategy perhaps on digital is interesting because it replicates very much what Naspers has done some time ago. You say you scaled back dramatically on your investments there in both technology and staff, and that you're becoming more of a focus on the aggregator of content rather than the generation of new content. Of course, Becker did this a couple of years ago. Perhaps you're following him.
Not at all. I think Chris got a lot more cash flow. I think to me, business is very like ABC. It's kind of, at the end of the day, it has to be rands and cents. You've got to be able to make money, and you can't sort of put the roof on before you build the walls. So what we did is we kind of said, if this is going to work, we actually have to have a proper working business model. At the end of the day, business is all about scale. You need to build appropriate scale, and we very different in the sense. I know our competitors have one kind of sort of aggregating site, but what we try to do is we try to have like our Times Live, our Sowetan Live, our BD Live, and the like. Each has their own individual sites, and then we use our Times Live as our aggregator, as it were. But I think we're quite cautious because this is a game still. I think the ultimate model hasn't been found yet in terms of what works. And the last thing we wanted to go and do is spend hundreds of millions of rands and then only to find that the model that ends up being adopted, and the sort of is the kind of model that we don't have. So I think I think everyone's still trying to find the correct model that works.
Andrew Bonamore is the Chief Executive of Times Media Group.